For the external costs of the automobile, see Externalities of automobiles. The car internal costs are all the costs consumers pay to afford owning and running a car. Normally these private expenditures are divided by fixed or standing costs and variable or running costs. Fixed costs are those ones which do not depend on the distance travelled by the vehicle and which the owner must pay to keep the vehicle ready for use on the road, like insurance or road taxes. Variable or running costs are those which depend on the use of the car, like fuel or tolls. Compared to other popular modes of passenger transportation, especially buses or trains, the car has a relatively high cost per passenger distance travelled. Motorists in the United Kingdom seem to spend on the car an average of roughly 1/3 of their average net income, while motorists in Portugal seem to spend 1/2 of their net income. For the average car owner, depreciation constitutes about half the cost of running a car. Nevertheless, the typical motorist underestimates this fixed cost by a big margin, or even ignores it altogether. The IRS considers for tax deduction calculations that the automobile has a total cost for drivers in the USA of $0.55 USD per mile, around 0.26 US/kilometer, and according to the American Automobile Association, the average driver of the average sedan spends totally approximately $8,700 USD per year, or $720 USD per month, to own and operate their vehicle. The yearly depreciation of a car is the amount of a financial quantity. The car value decreases every year. Normally this value is correlated with the price a certain car has on the market, but on average a car has a depreciation around 15% to 20% per year. Car taxes, road taxes, vehicle taxes or vehicle excise duty are the amount of money car owners pay to the state or to certain regional government within a country, normally yearly, to allow the car to circulate within that region or state. These taxes serve either to maintain the roads and all the correspondent infrastructures, or to compensate the negative externalities caused by the motor vehicles. These taxes normally depend on CO2 emissions, the engine displacement of the vehicle motor, the vehicle weight, or on some percentage of the car value. The insurance serves to provide financial protection against physical damage and or bodily injury resulting from traffic collisions, and against liability that could also arise therefrom. The prices may largely vary depending on the coverage levels, and in the UK, the payment frequency normally is made by trimester, semester or by year. In USA, payments are normally made monthly. Vehicle inspection is a procedure mandated by national or subnational governments in many countries, in which a vehicle is inspected to ensure that it conforms to regulations governing safety, emissions, or both. Normally these inspections are made annually, and the price varies depending on the region. The subject of car finance comprises the different financial products which allows someone to acquire a car with any arrangement other than a single lump payment. When used, and for the purpose of assessing the private financial costs, one must consider only the interests paid by the car owner, as some part of the amount the owner pays each month for the finance is already embedded in the depreciation's costs. The cost of capital, applied to a purchase of a car, is the amount of money the car owner could have obtained if they, instead of buying the car, applied that amount of money to other worthy investment. The cost of capital is the rate of return that capital could be expected to earn in an alternative investment of equivalent risk. Considering by default the car has depreciation, and that such depreciation is already considered at a certain cost item, the cost of capital of owning a car is then the income that the car owner could have obtained with the money spent on such car. One example could be a common standard interest rate in a deposit account.